let's welcome on board our experts and figure out what is it that they've made of the Monday meltdown and the recovery in the markets thereof. Kunal, hi, afternoon. Made it back to 24,300. What next now?
Yeah, I think it's a good bounce back for the indices. We are back again even from an intraday basis. I think we were at one point, the Bank Nifty was almost negative, and for the index to come back towards 300, 350 plus, and that too on the back of very small recoveries for many of the banking names, or rather good participation across lot many banking stocks rather than just one or two names which are performing very strongly. I think that's a sign that maybe the markets are looking at a base building formation over here. So 24,000 levels or slightly below those levels where we had gone through a double test of a support that remains to be now a strong support for the index. 24,500 still is a major resistance for the short-term trades on the index. And from the Bank Nifty front, I would believe 51,500 mark, which is also one of the crucial swing resistances for the index. That remains to be a key level on the upside. So we'll play on to these bounce back for the indices over the next couple of days. But I think the bigger trend could emerge once these key resistance levels are crossed.
Okay, watching out for those key resistance levels. But Devang, let's welcome you on board and discuss what's happening in the industrial space. A few days ago, after the entire meltdown per se of the market started, there were brokerages that came out with downgrades on the entire capital goods sector, saying that momentum plays are going to get undone. They are getting very expensive. But take a look at Cummins today, post the commentary coming in on the con call. That stock is up 7%. ABB India is just ahead of its earnings, is also fairly excited. What do you make of some of these industrials name? Is it better to take some profits off the table, or they still continue to be good buying opportunities?
Thanks for having me on the show, Anisha. I think we have clearly been very vocal on the so-called the industrials slash capital goods slash power, energy automation. These are type of companies, these are themes which are probably getting from more cyclicality to now a more structural play. So yes, if somebody says that these stocks have run up, these businesses have run up over the past 2-3 years, they have. But whether the earnings of these companies have caught pace with what has happened on the stock price front, I think yes. More so, a lot of these companies have their order book full. They have developed the execution capabilities very well. The margins are tending to improve for a lot of these businesses. And one thing is extremely sure that when you talk to the management of this companies, be it on a conference call or be it or generally when they come and talk about their business prospects, I think they've been extremely positive in terms of even their body language and commentary. So the sense one gets here is you can't write off the industrials or the capital goods or the power just on the back of higher valuations. Yes, there will be some cool-offs, which we saw the last 2-3 days. A lot of these companies corrected. But again, as I said, this will more be an opportunity for the next 2-3 years. Yeah, it now depends on your horizon. If you have a 3-month, 6-month horizon, yes, some of this probably could go through a correction. But if you are here for the next 2-3 years, I think most of these companies are going to do well, be it a Siemens or an ABB or a Cummins for that matter, which came out with an extremely positive type of commentary. So most of this, I think, are going to be positive going forward.
Talking about Cummins and the con call, they did talk about double-digit growth and they expect to grow at 2x the GDP rate, which means 15 to 16%, given the fact that the economy is expected to grow at least 7 to 8%. Listen into the management comments earlier in the con call.
Maintain the guidance of our ambition to grow at a minimum of 2x of the GDP, which in this year at a 6.5 to 7 is somewhere between 13 to 14% is what we think we should be able to grow. Our internal aspirations, of course, are to do much better than that. So that's what we are all working on. We have also had this ambition of growing profitably. So we continue to focus on all aspects relating to profitability. So not have growth just for the sake of growth, but continue to do it with healthy profits. And we have been ahead of the curve as far as profits is concerned. So we could, we could see some pressure over there. But overall, all the plans are linked to the growth of the GDP of the country.
Okay, that's the word coming in from the Cummins management. Stock holding up very, very smartly. But Kunal, couple of these PSUs which are making their move up, right? Everything from an ONGC to a Coal India, they're all looking very smart. Even a BPCL has jumped up quite nicely. and so has BHEL. Any particular stock that you're tracking out of these four?
So I think we were discussing this in the morning that ONGC, Coal India, NTPC, Power Grid, these are the stocks which I would probably believe could make a very strong comeback from the PSU pack. So I think even after today's price action move, some of them, for example, NTPC is a bit muted. GAIL, Coal India, they've done reasonably well. ONGC, of course, is one of the best performers from the PSUs. So I think in that aspect, I would continue to be bullish on these 4-5 large cap names, and expecting that the trend would continue. And the kind of corrections which you've seen in the last 1 week, a 5%, 7% broad correction for these stocks, I think could be taken as a good opportunity to try and build portfolios over here. My belief is that many of these stocks have restarted a very huge uptrend for themselves, and something which is on the scale of the quarterly and the yearly charts for these stocks. So I think you might probably get into a phase where excesses could be built, but whenever there's excesses get trimmed off and these stocks come back into short-term mean reversions, etc. points, I think they could be taken as a good buying opportunity from a long term.
Okay, buying opportunities, is that what you're looking at when it comes to some of the public sector entities? Let's pull up the chart of Reliance Industries and see if the stock is reacting to the commentary coming in from the annual report. Some very interesting comments coming in there. They're talking about how they have managed to consolidate the balance sheet after the previous round of capex, and now the fact that they're ready for the next leg of growth for the company as well. They're looking at exploring multiple technologies for recycling of carbon, which could be a big growth area because decarbonization is a big theme globally as well. They are talking about phased commencement of operations at the solar PV Giga factory, which is anticipated by 2024 end as well. They're looking at commissioning the MJ field, the KJ-D6 block, which accounts for almost 30% of the domestic gas production as well. And they're talking about Jio Bharat Phone, how it's managed to acquire 50% of market share in the sub-1,000 rupees segment as far as the phone hardware is concerned in the country. So a lot of interesting comments coming out of Reliance Industries annual report. We'll keep tracking that for you, but let's take a small break and we'll be right back with more.
Back with closing trades right here in ET now. Aditya Aurora as well joins in on the show right now. Aditya, hi, afternoon. What trends are you picking up as the market sees a solid rebound from the Monday crash?
I think markets are rebounding quite strongly, and oil and gas space is doing pretty well. And if I talk about the Nifty and Bank Nifty levels, then I see 51,000 and 51,500 strong resistance for Bank Nifty, and I think one should look to lighten up positions little bit over there, because a lot of call writers are active at 51,000 and 51,500. So I'm pretty neutral on index right now, and I like pharma and FMCG space, which is outperforming since quite a while. Yesterday also these two pockets did well, and I think outperformance could continue over here also.
Performance could continue as far as the pharma space is concerned, but just taking stock of some of the other buzzers in the trading session, Tes Networks, HCL, both from the telecom equipment basket, are fairly active. Ramkrishna Forging, Sterlite Tech, these are some of the other names to watch out for as well. And then Piramal Pharma is perking up. Deepak Fertilizers is doing well in the trading session. Wanted to check what Fusion Micro is up to, because it had opened with a gap down. 20% lower circuit is what it was logged at, and that's because the company posted a very, very dismal set of numbers, and there are some on the street who believe that tomorrow could be another down day for the likes of Fusion Micro. The credit cost jumped up to as much as 11.8%. Remember, the guidance for the full year is 3%. There have been cuts to the tune of 70% as far as the estimate is concerned of FY25. JMFL has downgraded the stock. IFL has downgraded the stock. In fact, Devang, what's your view on some of these microfinanciers? Do you think the party is over per se and it's time to turn back? Because there is those chinks in the armor which are emerging as far as asset quality is concerned, and they too had to take a large provision. Devang, the question is for you. Devang, you'll have to unmute yourself. Okay, I think we'll try and probably reconnect with him and get the understanding as far as this segment is concerned. But Aditya, what's the view on some of these microfinanciers, Fusion Micro, Poonawalla, Spandana Spurti? Is there a merit to look at any of these names on the charts?
I think all these counters are beaten down since last few days, but they are approaching important support levels. If we talk about Poonawalla FinCorp, then it has approached its important support level multiple times. The stock has taken support at levels of about 340. So if we see a turnaround over here, then I think one can go long. If one has to be level specific, then one can go long on Poonawalla above 356. One must maintain stop loss at 340 and target would be 365 to 375.
Right. In fact, since we're on that subject, also here are what the management of Poonawalla FinCorp had to actually say. Stand corrected at that. Fusion Finance, after their numbers and the kind of miss that they had, remember from the word go, the stock has been gapped down and locked in lower circuit. So let's hear out the management.
We remain watchful of the situation on ground and remain hopeful for improvement of performance in Q2. We expect to bounce back to normal business performance expected from us from Q3 of financial year 24-25. With both our initiatives and industry level steps start yielding results. We are calibrating our disbursement in line with the portfolio risk assessment. We have stopped fresh disbursements in 104 branches. We are further tightening our customer onboarding criteria. Our incentive structures have been revamped with more alignment with collections. The higher than usual slippage in our portfolio quality towards the later part of June led to increase our steady state credit cost to around 1.28%. We will continue to work on optimizing our cost of fund. We expect to maintain the cost of fund or marginal cost of fund at the similar level.
Okay, that's the word coming in from Devesh Sachdev from Fusion Microfinance. In the meantime, just looking at some of the other movers, and let's just bring up the stock price of Lupin, because that, after a strong set of numbers, has been holding out very steady. Remember, they're poised to launch 20 products now in FY25 in the country. They've seen a good 520 basis points of margin expansion, and the revenue as well has seen an uptick of nearly about 16.5%. That's Lupin in trade for you, holding up 4% as we speak right now. Devang, what are your preferred calls within the pharma pack?
So we actually like a couple of ideas and couple of segments. So MNC Pharma is one segment where we have been sort of buying a company called Abbott Laboratories since a long time. Now this is again more of a health tech company, right from addressing the thyroid drug, the thyronorm, to across the spectrum. It is present where there is a lot of innovation required. There are not much of a margin compression issues. These are companies. This is a company where margin keeps on generally improving, the sales as well as the profitability keeps on improving. We've liked this stock since long, and we still hold it for a lot of clients, and I think this is something which is very interesting. The second segment again is something very innovative. So it's a very small company, not recommending, but it is in some of our portfolios. A company called Gufic Biosciences, around 3,000-4,000 crores of market cap, but it's more innovator which gets into sort of new segments, and it's still not present in the US. It's more domestic as well as some certain other countries where it serves, and the capacity is almost full to serve to the US market, where it will probably develop over the longer term period. But both these companies excellent in terms of their ROE, ROCs. Both these companies are extremely low on debt, and Abbott, which I talked about, is a negative working capital cycle type of company. So yeah, we like this type of core businesses rather than getting into anything which is more adventurous or which is more sort of riskier in the current environment.
And thanks, Devang, for making time and speaking with us today. So that's a view on some of the pharma names that he likes at this point of time. But what's happening in general insurance, because the non-life insurance data was out. Let me take it across to Anurag to get a sense as to how the numbers stack up. Anurag, which company posted better than expected numbers? What was the overall trend like?
In month of July, in non-life insurance sector has shown a growth of 8.17% only. We have seen so many months where the non-life industry has shown a growth of double-digit growth, but in month of July, it's only 8.17%. If we talk about the premium, then premium has reached to the gone to the 27,941 crore from last year's 25,821 crore. Standalone health insurance companies have gained by 23%, and the listed player Star Health premium has gone up by 15.5%. Another listed companies, New India, the biggest player, the market leader. So New India Assurance has shown a growth of 9.3%. A premium has reached to mark of 3,557 crore from last year, 3,254 crore. ICICI Lombard has shown a double-digit growth, 15.74% in month of July. Go Digit, the new entrant, newly listed player, has shown a premium growth of 7.83%. And if we talk about up to the month of July, means for this financial, starting from April to July, then ICICI Lombard has shown a growth of 19%, New India only 4.37%, and Star Health shown a growth of 17%. And up to the month of July, overall non-life industry has shown a growth of 10.69%.
Right. Okay, on that note, let's take a very quick break. Come right back. We'll continue tracking markets on the other side.
If you like this video, then like, share and subscribe to ET Now.